Hey, this is Matt from InvestiQuant. Today is Wednesday, December 16th, 2020. And before I get started, just to remind you guys, today is the day of our auto trading webinar that'll be taking place after the close of the session today at 4:30 p.m. Eastern Time. If you guys have not signed up for it yet, I encourage you to go to the link that is below this video, which is investiquant.com/webinar. Fill out your name and email here in the box, hit register, and you will get a link to attend our auto trading webinar this afternoon. You'll be able to learn about auto trading, about the results that we have seen auto trading, and how you can participate in it with us. So go ahead and fill that out and join us this afternoon after the close to learn all about that. All right, let's hop into today's study. Today is the FOMC announcement, and the markets are pushing higher this morning. We are pretty much back at all-time highs now after yesterday's rally, and we've got the FOMC announcement coming out this afternoon. So I figured we would take a look at that type of combination where we're in a bull market and we're gapping up on FOMC announcement day. We can do that very simply here in Discover. So let me go ahead and look at all four instruments here using the setup intraday open long, which means this setup is based upon getting long at 9:30 a.m. Eastern Time. It will be exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, this study uses a gap up, or at least that's what we're going to be looking at. I'll tell you though, the opening direction, opening location makes a big difference on this study. So this might be something you want to come in here and play around with some different variations of, because that will make a difference in the results that you get. Some of these gaps can be bullish, some of them can be a little bit more bearish. So I'm using gap up here, and let me go into indicators next. And I'm going to say that we are in a bull market that is defined as above a 10-day simple moving average and above a 200-day simple moving average. And then lastly, I'll come into the market events section, and I'm going to say that today is the FOMC announcement. I can grab that from the active today section. It's also right here in the middle of the screen, FOMC announcement. You can hit equals next to it to add it. That puts it up here in the header section. That means it is included. Now I can hit view results. All right, here we go. So these are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, on the day of the FOMC announcement, when you are opening above the prior day close and you are in a bullish environment defined as above a 10 and above a 200-day simple moving average. Now, historically, we've got 43 samples dating back to 2003 in the S&P. We've got 48 samples in the NASDAQ. We've got 38 in the Dow, 38 in the Russell. And if we take a look at the win rates, you'll notice the S&P is quite a bit weaker than the others. The S&P win rate coming in at 33% historical win rate here. It's been fairly weak over the last handful of years. You can see the equity curve here in the blue is the S&P, and you can see it's really started to move lower here in recent years. The other ones coming in more neutral. So you've got NASDAQ at 52%, Dow 47%, and Russell 50%. So three of the four are very neutral win rates, and the S&P, for whatever reason, has been much weaker than the others in this scenario. If we take a look at the average win to average loss, the average loss just a little bit bigger than the average win in the S&P. They're pretty similar in size for the NASDAQ. The average loss coming in a little bit bigger than the average win in the Dow, and the average loss coming in larger than the average win in the Russell. So we are seeing the average losses coming in on average larger than the average wins in these scenarios, and we're seeing win rates that are neutral to weak depending on the market that you are looking at. So historically, this has not shown a bullish bias on this day. It has been neutral to weak looking at this type of pattern. So hopefully you found that helpful. Reminder, go to the link below, sign up for our webinar. That'll be this afternoon at 4:30 p.m. Eastern Time, and we look forward to seeing you guys there.